Hello guys, in today's video I'm gonna give you the top 5 Fidelity Index Funds that you will ever need, and these can potentially one day turn you into a millionaire. You actually don't need to be an expert in order to invest in the stock market. In fact, then you actually only need these 5 index funds, and that is enough to give you a well-diversified portfolio that also has the chance of making you rich. I know that it sounds really simple, and that is also exactly what it is. There is no reason to overcomplicate investing. So by the end of the video, you're gonna regret not having watched this video sooner. But let's start talking about number 1. Your portfolio needs a core holding, and this is where the majority of your money will go to. So let's say that you want to invest $100,000. Well, then you could put 50 or 60,000 of those into this one index fund here, and thereby making it your core holding. One of the best strategies there is, and one of the most well-documented strategies there is, and the one that I'm using myself, is actually making your core holding the S&P 500 index. And in order to do that, well, then does Fidelity have exactly what you're looking for, and that is the Fidelity 500 Index Fund. The main objective of this fund is to track the 500 largest companies within the US based on market cap. And investing into this index fund will actually give you a very small proportion of every single company there is within the S&P 500 index. When looking at the performance of this index fund, well, then we basically see that over the last year it has given a negative return of 6.88%, and that sort of makes sense with everything that has been going on with the inflation, with the interest rates, and so on. However, over the long term, this investment is really good. And if you had invested $10,000 into this index fund here 10 years ago, then today you would actually have more than $31,000. That essentially means that this index fund would actually have tripled your money over the course of only 10 years. And yes, past performance is no guarantee for future results. However, you can basically ask any investor you want, and they're most likely going to tell you that investing in the S&P 500 index is a very good idea. But not only is this index fund providing investors with a very good solid return, but they're also paying dividends. And the dividend yield here is 1.62%. So again, having $10,000 invested would mean that you would get $162 in pure dividend payments. The expense ratio here is also really low at only 0.02%, and that is absolutely amazing, because over time, well, then are these fees gonna eat away all of your profit. However, that is never gonna be a problem with this index fund here. The second index fund on my list is gonna be one that is going to provide you with a massive amount of cash flow. And that is because the second index fund is focusing on dividend payments. And the index fund is the Fidelity High Dividend ETF. This index fund is seeking to track the performance of mid and large cap companies within the US that are expected to continue paying dividends, or are even expected to increasing their dividends. And there is 111 high quality, high dividend paying companies within this index fund here. And when looking at the list of the top holdings within this index fund, well, then we basically do see very many big and well-known companies like Apple, Microsoft, P&G, Exxon, and many others. But let's start talking about the performance of this index fund here. The fund was basically founded back in 2016, and had you invested $10,000 into this index fund here back in 2016, then today you would have had more than $20,000. So basically over the course of 6 or 7 years, well, then have this index fund here doubled your money. And for a high paying dividend ETF, well, then that is pretty amazing. However, what really makes this high paying dividend index fund really good is of course the dividends. And it currently has a dividend yield of 3.7%. So had you invested $10,000 into this index fund here, well, then you would basically receive $370 in pure dividends. And that, combined with the extremely high return, makes this index fund here very good. And on top of the return and the high dividend payments, well, then does this index fund here also have a very low expense ratio at only 0.29%. And even though that is slightly higher than the one before, well, then it is still very low for a dividend paying index fund. The third Fidelity index fund that I would highly recommend is one that does actually cover the entire US stock market. This is most likely one of the most diversified investments that you can ever make. And for the average investor, well, then investing into this index fund here is a one-size-fits-all approach. The index fund that I'm talking about is the Fidelity Total Market Index. It provides a very low cost and a very good way of getting exposure to all of the listed companies within the US. This index fund does have more than 3,900 companies in their portfolio, and that is anything from small cap companies, mid cap companies, large cap companies, and you can get access to all of those by simply investing into this one index fund. And over the last 10 years, within of this index fund actually provided investors with an average return per year of 11.65%. And if you would have invested $10,000 into this one index fund here 10 years ago, well then today your investment would be worth more than $30,000. And this index fund here is also paying dividends. It does have a dividend yield of 1.55%. So had you invested $10,000, well then you would basically receive $154 per year in pure dividends. The fourth index fund on my list is tracking all of the companies that are placed outside of the US. And that is the Fidelity Total International Index. It is extremely important not having all of your investment placed within one country. You have to spread them into several countries, as that reduces your overall risk. There is actually a lot of people that are combining this index fund that I'm talking about right now with the one that I talked about before, covering the entire US, as this gives you exposure to both all of the companies within the US, but also gives you exposure to all of the companies outside of the US. I know that you can also buy index funds that covers the entire world. However, I never really do that. And the reason is that I like being able to choose how big of a proportion of my portfolio should be US and how big of a proportion should not be US. And that is very easy to control when you're buying these two index funds. This index fund is actually including more than 5,000 different companies. And it was founded back in 2017. And had you invested $10,000 into this one index fund here back in 2017, well then you would have had just below $15,000 today. And when it comes to dividends, well then is this index fund here also paying that, and they have a dividend yield of 2.31%. And that is actually pretty good for a broad market index fund. And that means that had you invested $10,000, well then you would basically be receiving more than $200 per year in pure dividends. The fifth and final index fund on my list is the Fidelity Bond Index Fund. So this one is actually not tracking stocks, but bonds. Having something else in your portfolio than stocks has proven to be a good idea, and it does help you decrease your overall risk and increase your diversification. And with the rapid increase in the interest rates, well then are bonds actually starting to become attractive again to us investors. Even though they are not as good as they were 10 or 20 years ago, well then they're sort of like starting to get it going again. However, bonds are giving you great diversification benefits, and it helps you maintain that high cash flow. I have between 5 to 8% of my total portfolio within bonds, and it does help soften any blow that I get from the stock market, and it provides me with a great amount of cash flow every single month, and it gives me a great diversification. So these were basically my top 5 Fidelity Index funds. Let me know in the comments below what your favorite index funds are. I hope that you enjoyed today's video, and if you did, then don't forget to smash the like button below and subscribe to my channel for more weekly content just like this one. See you in the next one.